Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. I'm also going to be doing this in one take, so I'm going to be the one take wonder today. So thanks very much for listening to this video today, and please, if you haven't already, please subscribe to my channel. It's very important to get future updates, and also please like this video to help the YouTube algorithm. Thank you very much. So in today's video, I'm going to be talking about the main things that happened in the market last week. And we're going to have a theme of, is it hawkish or is it a dovish situation with the Fed? So in today's video, I'm going to start off by talking about a little change that I've made to our portfolio. And that change is I've done a little bit of rebalancing, and it's something that I plan to do at the beginning of the year. So I've had a lot of people saying to me, well, Stephen, your minimum copy amount is quite high at $850 to copy all open trades. And I was aware of this. The way I trade is I often positions that I'm particularly bullish on and I have high conviction on, as they go down in price, and I often dollar cost average into them to get a better overall entry price, and that means that some of the positions are quite small. However, I have taken this into consideration the last couple of days, and I have completed a little bit of a rebalancing. So I have closed some of my very smallest positions, some of the tiny positions that were making their copy amount so high, and I've managed to reduce this now to a minimum copy amount of 670. Although this isn't a massive reduction, this should still help a lot of you to be able to dollar cost average into your copies a little bit more affordably. I do suggest a dollar cost averaging approach. It does help to smooth out and minimize and reduce the effect of timing on the copy. So if you haven't already, it's often a good time and a good practice to regularly dollar cost average into your copy. So I did close many positions. Most of them were in the positive, were in green, and they were profitable trades. There were a couple of that I closed in red, but for many of these, I also reopened a slightly larger position in order to fit the minimum copy amount and reopen those in our portfolio. If I didn't reopen the stock after I sold it, then that means that I wanted to reduce my exposure to that particular stock. So don't particularly pay too much attention to whether that stock that was closed was in red or green. It's all about the overall balance and the overall performance of the portfolio. So bear that in mind now when adding new amounts to the copy. So as we move on to our performance last week, and our portfolio was down about 1.76% last week. And that was because it was generally quite a poor week for US markets last week. Europe also performed pretty badly, and there was some continued weakness in China. We also saw BTC, it dipped last week, which it went down a few percent. It went down about 5.51%. And that is because there's a lot of regulatory concern at the moment, especially with the SEC are starting to open cases against crypto-related companies, and it scared the market a little bit. However, there was some outperformance in our portfolio from certain altcoins, which helped our portfolio. And 𝘁𝗶𝗃, for example, was up considerably last week, and it's one of my largest crypto positions in our portfolio, in which I averaged down a lot on during the depths of the bear market in November and December. We also had short-term position success last week. I opened up some shorts in some indices, such as ESP25, which is a Spanish index, and also the German 40 index as well, which was also a short position. And this is because I have a fairly negative outlook on Europe for this year compared with other markets such as the US and China, who I'm generally more bullish on. and I managed to keep some of the short positions open for a bit longer term, but I also did some short-term trades with short positions in those two indexes specifically. I also did some short-term trades, which is a continued Forex trade that I've been doing over the last few months in the US dollar and Swiss currency. And that is because it allows us to be able to book in some profits in the short term, and also it allows us to be able to pick up a carry trade interest from the difference between the US dollar and the Swiss currency interest rate. So it actually pays for it to be open for specific periods of time as well. I also did some other more speculative short-term trades in Adyen, as well as Nordic Semiconductor 𝗱𝗍𝗂𝗍, as I expected that they were going to have, after having a large drop, that they were going to have a small bounce back, which came to fruition. I also closed a long-term position in Nel Hydrogen, and that was closed. There was multiple positions, and the lowest was about 3.65% profit, and the highest was about 47.82% profit. And I just felt like it was time to take profit on that position. It had run quite considerably. I'm still pretty bullish on hydrogen as a potential sustainable energy source for the future, but I was just a little bit concerned about this environment, especially in kind of Europe and some of the Nordic countries, that it's an unprofitable company, and some of its growth had kind of slowed down quite considerably. And I just thought it was a good time to take profits off the table whilst they were there. So I'm pretty happy about that long-term position that I had. So how our portfolio compared to the benchmarks last week? The Nasdaq was down about 2.4%, so we outperformed that. However, the S&P 500 was down about 1.1%, and the FTSE was down at 0.24%, and obviously Bitcoin was down 5.51%. So we kind of we outperformed the Nasdaq, and we outperformed Bitcoin. And considering we have quite a significant amount of crypto in our portfolio, I think we overall performed pretty well for last week, considering the circumstances. So if we now look at the 2023 year-to-date benchmarks, our portfolio is up 18.30%. And we are also outperforming the Nasdaq, which is up 12%, the S&P, which is up 6.5%, the FTSE, which is up 5.78%, and the Hang Seng Index, which is the Hong Kong indices, which is up about 5.93%, and then Bitcoin is up about 31.19%. And I think the reason for our outperformance is obviously one, I think that the stock market has seen a big recovery this year in the US, but I think in particular our outperformance has been because of that China reopening, which helped a lot of our kind of COVID sensitive stocks to achieve some quite good gains. And also the crypto markets had a strong bounce back off the lows. So all in all, we're having a really great start to 2023. And I'm very hopeful, and I'm going to stay very dynamic with our portfolio to make sure that we achieve a good result in 2023, which I'm confident of. As we look at the main news from last week, as I said, the US stocks dipped last week. And again, most of the week was surrounded by, as it has been over the last couple of years, really, around what's been said by the Fed and what's been said by the Fed members. So earlier on in the week, on Tuesday, the Fed chair, Jerome Powell, he held a Q&A session. And what he did in that Q&A session is he repeated what he has been saying a lot over the last, well, at the last meeting, especially the last FOMC meeting, that disinflation process has already started. And this continued to provide a lot of optimism for investors that there might not be too long to go in terms of the Fed rate increases, for example, later on in the year, they may even look to do some quantitative easing. However, that rally at the beginning of the week kind of faded as the week went on, and that was because there was many different hawkish comments from other Fed officials, which happened the day after on Wednesday, and that seemed to kind of spook the markets again, and it sent stocks a bit lower. We saw last week on the job data, the weekly job data claims were slightly higher than was expected as consensus at 196,000. But really, even though it was slightly higher, it still remained near its 9-month lows. So I think the job market is still extremely buoyant. And I think it's a lot more buoyant than even the Fed and many investors had expected, and that there's still a very low amount of unemployment, and there's still quite a high amount of open jobs in the market. So it does give them room to increase those interest rates if required in order to continue to lower inflation. There was also a key appointment by President Biden, which just happened, which made the deputy chairman of the Fed, which is a lady called Lael Brainard, and she has now become the president's chief economic advisor. Brainard is known as being quite a dovish member of the Fed, so this could be quite, again, positive if she's got the president's ear about economic matters in the future in terms of the stock market. We also saw significant plunges in the share of Alphabet, which most of you will know as Google. They fell roughly 10% for the week. And that is mainly because there was a report from Reuters. And that report suggested that Google's new AI chatbot, it mistakenly identified the first satellite to take a picture of an exoplanet in its first public demonstration on Monday, making quite a severe error. And this was seen as not only a mistake, but potentially showing the weakness of Google's future AI capabilities. Luckily, we don't have Alphabet in our portfolio. We also saw last week, in terms of Europe, we saw several European central bank policymakers. They continue to reassert the hawkish stance, and that is in wake of the most recent setting meeting that they had. They are very strongly warning against complacency in the fight against inflation, and this kind of sends continued signals that the European Central Bank will continue to increase those interest rates to try and bring down inflation, and it's not as under control as most people think. I'm in the camp on a personal opinion that I don't think Europe will perform that well this year, and that's despite a very fast start to the European stock market, the last month and a half. However, I do think that because Europe was very slow to increase interest rates and were very slow to tackle inflation in the first place, that it's going to take them a lot longer in order to reverse that inflation. There was also a dependency on Russian oil and gas as well, which also set Europe back. So I think Europe is going to have a bit of a deeper recession than most people think. But obviously, it's going to be a crazy year. So we have to keep an eye on all metrics and data as they're released. We also saw Sweden has raised its interest rates by another 0.5 percentage point, and that brings it to 3%. So we're seeing this trend of continued interest rates rises around Europe as they try to tackle inflation. Lastly, Chinese stocks retreated, and this was around a spy balloon controversy, and this continued to increase tensions with the US, which has been quite high recently. Chinese stock markets did very well at the beginning in January of the year, and that was because of the reopening after COVID. However, in light of these tensions between China and the US, things have started to cool down somewhat. However, I am still very positive about Chinese stocks rising in 2023. I thought that they would a bit earlier in 2022, but as China continued that COVID zero policy and continued with stringent regulations in place around COVID-19, that didn't come to fruition, but now a lot of those have been lifted. I expect China to do very well this year. Also, they had very favorable valuations compared to its US peers. So our top 3 performing stocks last week, and there's nothing really to write home about too much, but the top performing stock in our portfolio last week was Flowserve, and that was up about 4.84%. The second best performing stock in our portfolio last week was Comstock Resources. Comstock Resources is a new stock that are added to our portfolio very recently, and that is because I see that natural gas, after a big surge in 2022 and hitting those all-time highs in natural gas prices because of what was happening in Russia, they have now significantly plunged below kind of historical averages. I still see that moving towards kind of a green energy around the world, and I think natural gas now is looking extremely interesting, and I think Comstock has a very low PE ratio and seems very undervalued. It's a very strong producer of natural gas, so I expect that to do really well this year as we see a bounce back in natural gas prices. I've also added a natural gas ETF to our portfolio as well, called UNG or UNG, and I expect natural gas to perform pretty well in 2023. The third best performing stock in our portfolio is Nomad Foods, and that was up 1.3%. Although in this presentation, I usually just mention the top 3 performing stocks of last week, but today I thought I would give an honorable mention to one of our cryptos that performed particularly well last week, and that is Hedera Hashgraph. I said in my yearly 2022 review, which I summarized what was going to what I expected to happen in 2023 and how our portfolio strategies and goals were, that I expected Hedera Hashgraph to do extremely well in 2023. It has done so far, and last week it was up about 25%. It's come down a little bit yesterday since I prepared this presentation, but it's still performed extremely well this year, and it has a lot of partnerships with some of the largest companies in the world that you could think about. So I'm really expecting HBAR to have a good couple of years ahead of it, especially leading into the next bull run. So as we move on to our Death by Charts edition, I'm going to be pointing out some different charts for you today. And the first chart I just wanted to bring up was the US job openings. I mentioned earlier that US job openings, although they have come down slightly over the last few months, they are still quite historically high. But the job openings are starting to come down slightly, which puts less pressure on increasing wages, which helps inflation to reduce. However, I think that there's still room for this to reduce and for unemployment to increase. And I think it gives them scope to be able to increase those interest rates slightly and hold on for longer than they would have been able to if the unemployment market was different. We also see the chart to the right, the S&P 500, and we can see the operating profit margins. Again, they're still at a historically quite a high level, but they are down from the peak, which was 13.5%, and they're now down to about 11.2%. So they are starting to come down, those profit margins, and a lot of that is to do with wage inflation, the cost of goods and services also increasing, and the cost of raw materials increasing, which then puts a pressure on operating and the profit margins. The third chart I just wanted to bring up, and it's quite small there, so my apologies, is that we are expecting inflation to come down quite significantly. And one of the key drivers of inflation increasing during that kind of 2021 time was around kind of food inflation. And we saw fertilizer prices, which is obviously essential in food growth, hit its peak in March 2022. However, that has now come down significantly, and it's continuing to trend down. And we're now at the lowest level that we've seen since Feb 2021. So that's coming down significantly, and we expect, as there is a lagging effect in those inflation data, that food inflation should continue to decrease. Also, which is kind of linked to that, is obviously in 2021 and the early part of 2022, we saw the global container prices continue to increase, and that's why we had these kind of supply chain bottlenecks from around the world, because it was very difficult to be able to transport goods and services cheaply and affordable around the world, which had obviously a big monster effect on inflation as well. And we've now seen the container freight prices trend downwards, and they're now at 82% below the peak. So this is pretty good for inflation, and we're starting to see that we're going down to kind of historically normal levels, and that they were incredibly inflated in the past. So this is pretty good for the economy, I'd say, overall. So as we move on now to the crypto news and views, it was quite an eventful week in crypto. Bitcoin has dipped slightly for the week. It was down about 5%. However, it has had an extremely good start to 2023 as it bounced off those lows at the end of 2022 at around 15,000, just over 15,000. And now we've seen that rise above 20,000 now to 21,700. Pullbacks are quite common during these periods where we start to see a bounce back. It's quite important, I think, to kind of hold these levels or hold above 20,000, and that is to make sure that the support is still in. However, there was a lot of regulatory issues that were brought up this week, and the SEC have done kind of two major things this week in terms of regulation. And the SEC has stopped Kraken, which is a crypto exchange. It stopped its staking program in the US. This was very controversial. You're seeing many of the CEOs of crypto exchanges talking about this, such as Brian Armstrong. And I think that the SEC are significantly delaying and stopping innovation in the US in terms of crypto compared with other countries around the world, and it's putting it behind. And Kraken was provided with a $30 million fine last week and told to halt their staking program in the US. And this has and will start to see other crypto exchanges in the US stopping these staking programs. However, I just want to say on another note that this could be quite good for decentralized finance and some of the decentralized finance protocols. And this is because you'll start to see a lot of those investors starting to invest in DeFi systems rather than these centralized staking programs that they have in place. Another thing that happened very recently is Paxos. Paxos is basically supplies and does the minting of Binance US dollar coin. And this is actually issued by Paxos, not issued by Binance, as a lot of people think. And they have been warned and hit with a lawsuit from the SEC and asked to stop minting BUSD. This could have some wide impacts on Binance as a whole and also the stable coin market. And it's likely that we're going to see some changes in terms of the Binance exchange, and we might see some more pairs spring up for other stable coins, such as USDT, which is different to having the BUSD, which they've been using as their primary trading pair on Binance. So I think we're going to see some changes there, and Paxos are not going to be able to mint any new BUSD, and we're likely to see the market capitalization decrease quite significantly in BUSD. So it's a bit of a blow, really, for Binance. I know myself, I did hold some BUSD in terms of stable coins in my own personal portfolio, and I have since converted those to other stable coins, as I'm not as confident because of this crackdown in terms of BUSD. So be very careful there if you're holding a significant amount of BUSD. We also seen Iris Energy, and they're a Bitcoin miner, and they have tripled their hash rate, and it's estimated that they have another 44,000 new Bitcoin miners. And this is pretty good, because what we saw at the end of 2022 is we saw a capitulation of Bitcoin miners. A lot of them were selling off those rigs, and they were selling off the Bitcoin that they had in reserves. And it's very positive now to see companies such as Iris Energy actually increase their hash rate, and which is, I think, very good for the security of Bitcoin and the future hash rate of Bitcoin. And I think that we've seen a lot of that capitulation, which happened in 2022, come to an end. And I'm expecting a pretty good future for Bitcoin miners. We've also seen a new trend of something called the Bitcoin Ordinals, which is a new NFT project. And this stores NFT data within the Bitcoin blocks. And it's a kind of one of the first projects, NFT type projects, that's been able to be done on Bitcoin. This has sent a lot of NFT collectors into a frenzy, and we're seeing a real uptrend in the price of those Bitcoin ordinals. So lastly, I just wanted to pick up on what I mentioned about Binance US dollar. Also talk a bit about USDT, which is another stable coin, also known as Tether, and also USDC. So if you can see from this chart, what it actually plots is the USDC circulating supply and the USD circulating supply. It doesn't have BUSD on it, but really what I just wanted to show is that we're seeing an uptrend in use of USDT compared with USDC, and that's because there's some regulatory concerns around USDC, also Binance US dollar, and so we're seeing a much higher take up of stable coins in USDT, and it'll be interesting to watch that relationship over the next couple of months. And I do expect the market capitalization of US dollar DT to increase this year as more people start to convert the stable coins over to USDT. It's quite a stark contrast to a lot of the things that have been said over the last couple of years, where there was a lot of concern about USDT, and that there was a lot of saying there wasn't good enough audits, and it wasn't sure that USDT was backed, had enough in its reserves to match the deposits. However, we're seeing kind of that narrative flip on its head now, and we're starting to see a lot more people use USDT. So that's the end of my video today. Thank you very much for listening. Thank you very much for being invested in my portfolio. I really appreciate all of you, those that have been copying me for a long time and some of my newer copiers. Please feel free to ask me any questions if you ever have them. And as usual as well, if you want to join my Discord group, we have an awesome community of people regularly chatting about really great conversations. So if you haven't joined that group already and you're new, then don't miss out on that. You can find the link in my profile description, bio description. So thank you very much and have a great week ahead.